I was corresponding with one of my past clients um, about exactly this subject. He had sent me an email pointing out the challenges of being a homeowner. I had actually arranged a refinance for him back in 2021. Interest rates 2.75, but his mortgage payments have been going up. Well, of course, it's not the mortgage payment itself, the principal and interest. It's a fixed rate loan for 30 years at 2 3/4. What's happening to him, of course, is property taxes have gone up. Insurance, in particular, has gone up a whole lot, and even HOA dues where the property is located have gone up. So that's the component of his housing expense that's really been a challenge for him. And I looked at his current loan balance and I suggested, a reverse mortgage may be a very good solution for your situation because you can eliminate the mortgage entirely and not make a payment at all. And then, of course, you still have to pay that higher property taxes and insurance and the HOA dues. And it was interesting because he immediately dismissed that. And I actually wrote down some of the things that he commented on in his email back to me. He's like, I'm not interested in a reverse mortgage because they have high fees and costs. Yes and no. In terms of fees, two things. The standard core product, the HECM, you can run into some originators will want to charge you a $6,000 origination fee. Beware of that. You shouldn't have to pay that. We don't charge that. We can if we want. We don't. We get paid by the lender. Reverse mortgage is actually odd in that it's like the last mortgage program available in the U.S. where an originator like us, we can charge an origination fee to the borrower and still get paid by the lender as well. First mortgages can't do that. So that's one thing I'd say. If you're looking at a reverse mortgage and somebody wants to charge you a $6,000 origination fee, tell them no and call me because I can show you can get the same loan without that origination fee. Otherwise, closing costs are normal like any other refi. A standard loan amount, $300,000-400,000. The closing costs are going to be maybe $3,500. Now, where the big objection is mortgage insurance. Again, the HECM home equity conversion mortgage is an FHA product, and there is a mortgage insurance premium, and it's substantial, 2% of the principal limit. First mortgages, FHA, it's 1.75. So it's very similar to a FHA first mortgage. Lots of those get done. I don't know why the same mortgage insurance on the reverse mortgage is so objectionable by people, but it is. But what they're forgetting is a reverse mortgage is a non-recourse loan. So what that means is if you keep that loan for many years and the value of the home, for some reason, one of those 7 years out of 75 drops, and your loan balance is higher than what the home is worth, you're not responsible for the negative balance, nor are your heirs. So neither one of you or your heirs would be responsible for that negative balance. That is the reason why that mortgage insurance actually should be embraced as a good thing because it protects that homeowner and the borrower from having that problem in the future. But here's a few other things that he mentioned. I'll lose all control. Puts the federal government in control. Home would become the government's home. The home will go to HUD when I pass away. The lender may foreclose on me if they don't think I'm maintaining the property adequately. And that my heirs won't be able to inherit the home. Well, of course, I had to respond to him that none of that's true. When you get this reverse mortgage, you're not going to lose control. You still own your home. The reverse mortgage is simply a mortgage lien recorded against your home, secured by your home, just like his existing first mortgage is. And yet with his existing first mortgage, which happens to be a VA, he doesn't consider that a case of the government owning his home. Yet if he gets an FHA HECM, he thinks the government's going to control and own his home. Not true. It's a mortgage like any other, secured by your home as a mortgage lien, just like any other mortgage, just like his existing mortgage. The difference simply is you don't have to make payments unless you want to. And then the idea that foreclosure if the property is not well maintained. Well, that's not to mean that the government's got like inspectors who are going to come check on your home and see what kind of condition is, and then you get a letter in the mail. Sorry, we're going to foreclose on you because you didn't keep the house painted or something like that. That's just not how it works. So I think that's a fear that is way, way, way overblown. And I think as a consequence, that is an impediment from some senior homeowners from looking at this product